Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So for today, we're going to go over the overall portfolio value, the value by the metrics, our buying power, the individual holdings, how they are performing, as well as the watch list and what prices I would buy those stocks at. So jumping in, we're sitting around about 52K, around $162 in the green with a 0.32% gain today. That 1 week mark, we're up about $500, up about 1%. That 1 month mark, we are down big, $3,500 with a 6% loss. That 3 month mark, we're up $645, a 1.26% return in the green. Year to date, we're up $2,100 with a 4.36% return. 1 year mark, we're up $9,300, near a 22% return. And then all time, we are up $25,000 with a 96% return. Guys, in the short term, anything can happen. Weeks, months, even, year to date, that 1 year mark, anything can happen. All time, if your stocks earn more money, if your companies are earning more money, your value should go up. Buying power is sitting at $31. I'm going to use that to buy a share. Once Altria pays, I'm going to use that to buy me a share of Google and hopefully, a share of Apple and hopefully another share of Google as well. So Altria, as long as Apple stays below like 220, I think, and Google stays below like 150, something like that, I should be able to buy a share of both. Jumping in with Realty Income, Dividend Aristocrat down a little bit today at $57.83. We have 5 shares, around around $290, $300 worth of market value. Average cost is $51.75. 0.5% of the portfolio is in Realty Income. Today we're down $3. Total we're up $30 with an 11.8% return. Guys, this has had a great return overall. One thing that I do like about owning a real estate investment trust is they don't move the exact same as, tech companies or some of these other companies that have had a lot of volatility due to the tariffs. I mean, Realty Income is based in America. They own a lot of, land essentially, and they just get rent checks. So when stuff like this happens, the companies that they get rent from might be affected, but I don't really see Realty Income being affected much by the tariffs. So that's one of those things that diversification is extremely important because you want stocks that operate in different industries, different sectors, and that are affected by different things. If there's a huge AI, say like there's a huge AI grip or whatever, say that the federal government doesn't want AI to be a thing, or something like that. Say there's something with big tech that comes up. Realty Income owns real estate. They're not going to be affected by that. If you have a huge, say there's a huge like recall on Coca-Cola and other food products, that's not as big of a deal, right? Say there's an outbreak with McDonald's, Burger King, Wendy's, etc. in the restaurant industry. Say COVID happens. Some of the businesses that Realty owned during that time did have to shut down, but they were less affected. So that's one of the reasons that I love Realty Income, and I do want to build it back up to around the original. I think it was like 170 to 200 share count, is because even though, the stock market has been volatile, Realty Income is a really good safe haven for me mentally to put my money because I'm not as worried about the position, and it just gives me steady income every single month. And I want that. Eventually I'd love for this position alone to supplement my income to the point where I don't have to go to work if I don't want to. I want that monthly income to be consistent, just as consistent as a paycheck. Pays me on the 15th of every month, and let's say, I make like $3,000 or something a month now. I'd love for that to be, on the 15th, $3,000 hits my account and I know my bills are paid, right? That'd be insane. That'd be great. So that's the overall goal. But I love the fact that Realty Income has been less volatile. It's actually up. And that's good and bad, right? So there were buying opportunities with Apple, probably Tesla, other companies like big tech got slammed and I didn't get to jump in as well as I wanted to. But also, when you have these companies that are not correlated, while Realty Income's been up, Apple was down. So it'll take a different type of event for Realty to go down, and I do want to add more. So overall, guys, love Realty Income. I plan on adding more shares when it makes sense for me at the right price. But I do love that it's been a bit of a safe haven for the portfolio. Next up, we've got Altria at 58.13. Dang, they're right around the same price right now. So by market cap, I believe 98 billion, and then Realty Income is sitting at what? 50? Yeah. So technically, Realty Income would be fairly priced. But Realty Income's a great company. But then next up, we've got Altria sitting at around 58 bucks a share. Dividend coming in on the 30th of April, 326.40. That plus the dividend from the dividends from Realty Income and a little bit from leftover from last month should buy us that Google and Apple share. So as of right now, we are, let's see, why is it not showing my, there we go. We're sitting at 320, $18,600 of market value. Average cost is $47.27. 36% of the portfolio is in Altria. That has gone up because other stocks have gone down. And Altria has actually gone up. Today we're down $200. Total we're up nearly $3,500 with a near 23% return. So guys, while Apple, Google, Visa, we're seeing negative 15 to 20% drops during the tariff scare, Altria is all based in America, based at home here on our soil. So Philip Morris probably dropped a bit, but Altria is American tobacco. And they're the same. Technically, they're the same company. They spun out of each other, but Philip Morris is international cigarettes, and Altria is American cigarettes. So that's how they differentiate themselves. Altria is America. Philip Morris, I believe, is literally everywhere else. So that's why you didn't see as much volatility with this company, because it didn't have to worry as much about exports, imports, exports, tariff stuff, because it's based here. So overall, guys, 23% return, near 23% return here with Altria. This is going to be buying me Apple for the rest of my life, essentially, unless Apple, gets up to 330 bucks a share. And if it does, I'll just buy some more Altria. So that's the goal, is this month buys next month, and Altria does a great job of that. Next up, we got Coca-Cola at $72.69, down $1 today. 15 shares, $1,000 worth of market, almost $11,000 of market value. Average cost is $60.54. 2.1% of the portfolio is in Coca-Cola. Today, we're down 18 bucks. Total, we're up 182 with a 20% return. So, guys, honestly, both Altria and Coca-Cola have done very well because brands, regardless of what's going on, export, import, tariff, stuff like that, people are brand loyal. If they smoke Altria, they're more likely to smoke more, actually, when stuff like that happens, when there's economic uncertainty. But Coca-Cola has a very strong brand. People are very loyal to it. And even during times of economic hardship, like during the Great Depression, there was a town, I think it's Quincy, that there was a banker that was telling everybody to buy Coca-Cola because regardless of what happened during economically, people were still using their last nickel in that town to buy a cold Coca-Cola. And he noticed that trend, and now that's one of the richest, it was for a while one of the richest towns in America because of the fact that they owned so many Coca-Cola shares. So when everybody was freaking out, as long as they had some shares, of a profitable, strong brand, they were fine. So this company has helped a lot of people become millionaires. I believe it will help me become a millionaire. This is the number one stock that I get flack for owning, aside from Altria, because people think it's not going to grow. And it's a dead horse because it doesn't have the same growth prospects as Nvidia, something like that. And I don't care. I just want to own it because I love the brand. So, when those people say Coca-Cola is not a good performing stock, well, when Visa, Apple, etc. were down 20%, this is up 15 to 20%. So even though it doesn't have the sexy high-tech growth, it does have that safe haven effect. People put money into this company when economic times are hard because they understand the brand loyalty that Coca-Cola has. Next up, we got Apple, up $204.50, 12 shares. Still a buying opportunity for me, but less than it was about a month ago. $2,400 of market value. Average cost is around $220 per share. Around 5% of the portfolio is in Apple. Today we're up 58 bucks. Total, we are down 160 with a 6% loss. Guys, I'd still buy it here. I just had a way better opportunity down in those 160 ranges about a month ago. I believe it got down to 170. Yeah, I got down to 170. So I had a nice upside, 40, 50 bucks per share. I got a tooth out last Friday, so I didn't have any extra cash. The 500 bucks that I would have put toward that Google and Apple share, 2 Apple shares like I wanted, went towards my tooth. So didn't get to buy. I was kind of ticked about it, but you know what? Another opportunity will come, and I'll try to make sure that I take full advantage of it. But as of right now, we are in the red a little bit with Apple, which I'm okay with because it's a nice buying opportunity. I hope it stays around these levels, around that $200 mark, so I'm guaranteed to buy that Apple and Google share. Next up, we got AbbVie at 175. This is one of those that got hit pretty hard during that tariff issue as well. It's still ongoing too, so it's not like it's past us, so I'm not going to be surprised if I see more volatility in the portfolio. But as of right now, we have 95 shares, $16,000 worth of market value. So this got all the way up to like $200 per share, around that 220 mark, and now we're down $16,000. So I'm not going to sell this company. I love the dividend income. I love the business. So on the management team, so overall, this is not a business I would sell unless they cut the dividend at a very big clip. So if they do like a 50% dividend cut, I'm probably going to put it into something like Costco or put it back into something like Apple if it's a good buying opportunity. But as of now, even though I don't have a $20,000 position portfolio in the portfolio, I'm not worried about the overall business health of AbbVie. Up 165 today, up 7,684% return with a dividend of $155.80 coming in on May 15th. Then we got Visa at $334.96. Guys, another great buying opportunity here for Visa. It was almost down to $300 per share. So you're up, $30 per share in a month? That's not too bad at all. So, I mean, if you had it at $350, I had it at $350, so my ass is down, but I have 35 shares, $11,700 of market value. Average cost is around $350 per share. 22% of the portfolio is in Visa, so a good buying opportunity here for me. $123 in the green right now. Total, we are down about $500, around a 4% loss here on Visa. So still a nice, good cost down average opportunity for both Visa and for Apple. Then Google's about 160. It's up a little bit today. 7 shares, $1,100 of market value. That will be going up by the end of this month. Average cost is around 190. 2% of the portfolio, 2.13% of the portfolio is in Google. Today we're up $30. Total we're down 210. 15% loss here. I think as of today, Google is by far the best buy in the portfolio. So I'll be adding it by the end of the month. And then of course Costco. I want it around $9.50, and then Berkshire. I'm going to the Berkshire meeting soon. I would love to add another share, but I want it below that $500 mark. So as of right now, Costco might be an add. It's close. Berkshire, I might just bite the bullet by the end of the year and buy a single share, regardless of price, so I can cost down average in the future. I just want that invitation to the Berkshire meeting next year. So guys, with everything, all wrapped up, we're around $52K worth of market value. Honestly, with how much volatility we've been seeing in the stock market as of late, I'm not surprised to see we're below that 52K mark. I'm not surprised to see we're down a little bit overall today. We're in the green from where we started, but I'm not surprised to see that spike and drop. It'll keep happening. We don't necessarily know how long the tariffs will be in effect. We don't know how other countries are going to react. So volatility is an opportunity. The more volatile my portfolio, the better. If I didn't have a tooth that was taken out like last Friday, you best believe I'd be having about 12 to 15 shares, 16 shares of Apple. I would have bought at least 2 or 3 shares with that last paycheck. But I will be adding at the end of this month. So even though it's not as good of an opportunity, I'm still excited to add to the Apple and Google positions because I want them to be 2 of the biggest positions in the portfolio. With that being said, thank you guys so much for watching. I apologize for no updates. I got a tooth out, so I haven't really been in a talking long-term mood. But I feel better today, so I want to start doing the portfolio updates again. So thank you so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.